Hey YouTube, it's Nick here. Welcome back to the channel. So we're gonna have a banger of a video today. Now, I already did this and I deleted it on accident. And it was like a 50, it was a 50-minute long video. So I'm gonna have to do it again, but that's okay. I remember exactly what I talked about. We're gonna go down the list. Crypto, it went on a run this week. Now we're kind of tracing back a little bit, but we're gonna be talking about that. Bitcoin, a little bit of some altcoins. Is the bear market over? Long-term treasury yields hitting record highs. Is this basically the same as 2017? If you're young, hey, you probably don't know that. Hell, I don't even have much knowledge of it, but we're going to be talking about it. Inflation, uncertainty, rates might rise, PMI, bonds, the U.S. Iran conflict, and we're going to end it off with what I'm doing in 6K incoming on the portfolio. Boom. Now, Ethereum and Bitcoin led the way. I talked about this in my portfolio overview video that I just made, and basically we went up almost like $800 over the week. So we had a decent run. And as you look here, this is just a little bit of kind of the pie chart and kind of a breakdown of what I have. If you care more about that, the video to that will be down below. I'll just put it in the comment section. Now, as far as what's going on in the market on this Sunday, right before we start a new week, equities are on bid on risk appetite while crypto faces liquidations and regulatory pressure. Now, global equities are outperforming with 15 of 17 indices green. VIX falling. It fell about 5 points, but crypto is under pressure from 114 million in liquidations over 4 hours and fresh regulatory scrutiny from the Bank Policy Institution on stablecoin KYC rules. Bitcoin has fallen to $76,000, testing key technical levels as positioning unwinds. Now, why does this matter? All right, cool. We're gonna run down this list. Crypto is at 73 on the Fear and Greed Index. I haven't really seen it this high since October of last year, but right now I'm gonna have another video come out basically, saying if Bitcoin is worth to buy in 2026 or not. But right now, this isn't financial advice. But if like it's still not a bad time to buy these. You just probably don't want to go all in. Now, Bitcoin hit around like $79,000, and then basically a lot of people who were trying to short it, hoping for around 40K in the coin's price, they all got liquidated, and it was like a this is like a historic moment, like billions of dollars was lost and people trying to short it. And then that just kind of helped shoot the price up for it. And then it hit around 79K. And then some people shorted it and now they're making their profit. And now we're back at around 77. Now, what I'm going to do, we're going to talk about that in the end. But like I said, the VIX is sitting around 15. If you look at the stock side, that's sitting at about 55 right now. So basically, in the equities market, we hit all-time highs for the S&P 500 and all these earnings coming out from these companies. It kind of shot everything up. And now we're kind of retracing on that, but there's so much going on. And the main thing that's kind of setting all of this off is the long-term treasury yields. So when the treasury yield is spiking, like it hit a point where it's as high as it ever been since 2007. So when the yield is going up, what that matters for you is that means that the Fed might have to raise interest rates. And how it affects you is going to not only affect like your mortgage loans, if you're getting a car loan, credit card, stuff like that. So that's the everyday effect that you get from something like that. And when it comes to someone, if you're maybe investing in stocks, that's also going to give things like tech companies a lot of hit too. So basically, even if these companies are making like a lot of money and if they're projected to make a lot of money, if the yield is going up and the inflation is going up, then even if the price for these companies are going up, it's technically not worth that price, or it's not as much money being made, if that makes sense, if inflation is going up along the way. So that's a little bit of why stocks are dipping. We're going to talk about that a little bit, and then we also just finished covering why crypto is running, and we're also going to be talking about something that's kind of hit the United States by storm. Walmart just came out with their Q2 earnings, and I'm gonna just keep it real with you. Now I understand that, especially if you're just getting into this, but basically everything at Walmart is up. They actually had a decent income earnings report, but the thing is that one of the things that kind of made it not as great, or it kind of made people disappointed with it, was that basically they also had the tariff refunds that they got back too. So and but regardless of what anyone says, people are shopping at Walmart. Like you go into a Walmart right now, like it's packed. It's packed. People are buying stuff, and people are trying to look for deals out here. And Walmart is a recession-proof company. Now, if you invest in it, that's on you, but it's a recession-proof company. So when all things hit the fan, people are still going to need food, and they're going to want other things maybe around their house or stuff. But the main thing is that this is a place that sells food, and it has like, even if the stock price is falling, they're going to be making a lot of money regardless of whatever era they're in. That's the whole point. But that's kind of had some people scared. I'm gonna let the experts kind of talk about that in a little bit. But this is kind of like had everyone in a frenzy basically because they were disappointed with what they saw. And if you actually look at the numbers and dive a little bit deeply, then you will see that the tariff refund also contributed a little bit substantially to everything that they got going on. But this is a great business. Now, there's a lot of other businesses that might have better business models, but you can't go against a place like Walmart going out of style and even like that, like they're not losing money. That's my point. And even if you are someone that's investing in this, like even if the stock price is falling, you're still going to be making they're still going to be making money from it. But should you put your money into it? That's neither here or there. Now, what we're going to be talking about next is we have about 4 videos we're going to be reacting to. We got Wall Street turbulence. Is your portfolio built for it? The Treasury buyback was wise thing to do. So that's another thing that kind of triggered why Bitcoin was going up as well. We'll talk about that. We're also going to talk about trading the week ahead. Basically, what the investment committee's strategy is. They're going to be talking about what they're going to be doing in the week that's going to be starting tomorrow. Then we're going to have another video where basically experts are saying you should buy the dip in a volatile market like this. And then we'll end it off with basically how it all pertains to you with consumers are still going to be opening their wallets, which is what another expert is saying. So, like I said, we got a banger. We're gonna jump straight into it, and we're just gonna go down the list one by one, and then we're gonna cap it off with how it all matters to you at the end of the day.
We bring in Kevin Mon, Hennian and Walsh Asset Management President and CIO. Kevin, you see all of these as factors that could really shake up the market,
yes,
and that investors need to climb a wall of worry posed by all these concerns.
Yes.
What is the most important area to be watching right now?
Obviously, the largest overhanging geopolitical risk right now is that there is no resolution with Iran. The Strait of Hormuz remains closed, or at least limited, and that keeps oil prices above $90 a barrel, keeps gasoline prices as high, and prevents the consumer from spending as much as we need them to continue to grow this economy.
That's inflationary.
That's inflationary.
So is the AI trade, especially with this debt that the AI companies are taking on. Jason, where I think he explained that really well.
Yes.
My bottom line on that was oversimplifying it, that the debt is healthy, that big hyperscalers and AI companies are taking on. What are your thoughts?
Yeah, I still contend, if I could use a baseball analogy here, Lauren, that we're just in batting practice of a doubleheader as it relates to the AI revolution. Batting practice is the
We haven't even started the game.
Haven't even started to play the games
Okay.
yet. We still need to build out the infrastructure necessary so that AI can ultimately transform society and improve the bottom lines of all the companies spending the billions of dollars. But we're going to need to be patient to see that ROI. So if you want to find the investment opportunities today, continue to focus on who's receiving the money, not who's spending the money.
So many people, like the Bank of NVIDIA, if you will, making all of these deals with the PE shops and the banks to make sure their customers have the financing to buy their chips. It just seems awfully circular.
It is a circular financing rut, if you will. But that doesn't mean there's not going to be winners and losers. I think the bigger risk here is those who underspend or don't spend at all, as opposed to those who may spend too much or take on too much debt to ultimately transform their bottom lines. It is a fair balancing act, though, and that's why you need to build a diversified portfolio, not just try and pick one or two winners.
Then there's Jensen Huang
Yes.
and NVIDIA next week. I think 91 billion in revenue in the past 3 months is the expectation. But look, if it's not 100 billion, if there's not a big beat, does NVIDIA get sold?
I don't think it matters. I think they're going to have record earnings. I think they're going to beat on revenues. They're going to beat on earnings, and they're going to guide higher once again. And the street's going to say, oh, they continue to do this. It's not enough. Because people keep poking at this perceived AI bubble, almost hoping it's going to burst, and they're wrong to do so. And NVIDIA sits at the hub of that AI ecosystem. So if they're continuing to grow earnings, they're continuing to grow revenues, they're continuing to guide higher, that's good for the health of the AI.
Who's their biggest competition?
I think there's multiple prongs right now. If you want to just focus on semiconductors, well, Broadcom is a huge, huge competitor to them. But they're also in the data center business now. In fact, last quarter, over 80% of their revenues came not from chip sales, but data centers. So they are diversified.
What about China?
I mean, that's an incredible opportunity for them, but I think there's tremendous more opportunities here in the U.S. And the partnership that they put in place with Taiwan Semiconductor to help them build that fabrication plant in Phoenix, Arizona, and they're going to build another one, is good because it ensures the production of their chips here in the U.S.
And then they are favorable as a truly American company.
Absolutely.
Kevin, that was a
Absolutely.
really good answer. Okay, let's pivot away from tech, away from NVIDIA, to aerospace and defense. You like Lockheed Martin, RTX, and Moog. Why?
I do. So if you follow the money, and this has been a mantra for me for the 30 years I've been on Wall Street. I know that surprises you because I look so young. But if
You do.
I want to thank you, Lauren. But if you follow the money into where all the money's being spent, it's not just AI infrastructure, it's also aerospace and defense. Lockheed Martin, they're actually involved in Sikorsky helicopters, the F-35. We have RTX, they have Pratt & Whitney, they have Collins Aerospace, and of course Raytheon, their interceptor missiles. They were just awarded a big contract, multi-billion-dollar contract from the Navy. And then we have a company probably no one has ever heard of before, Moog Incorporated. They're involved in rocket propulsion, space vehicles, and also missiles and missile interceptors. So a blend of aerospace and defense.
Okay, so you like those three. You brought up space, and I was thinking about this when you were talking about NVIDIA. I mean, their relationship with SpaceX. I mean, Elon Musk has said Vera Rubin is like the best chip there is.
Yes, yes. And anything that NVIDIA touches, they have the Midas touch, turns to gold. So certainly the blessing from Jensen Huang and NVIDIA on SpaceX bodes well for Elon Musk. Not that he needs it because he's the Willy Wonka of our times. But if you're looking for opportunities in space, there are other companies that are profitable today, didn't have a multi-billion-dollar operating loss as recently as last year, and are involved in the same technologies that Elon's looking to build. So if you want to be in space, look to companies like GE Aerospace, Howmet Aerospace, Moog Incorporated, and even companies like Lockheed Martin.
Because the data centers are going
Orbital data centers.
up there.
Not today, but eventually.
In our lifetimes, even though you look young,
yes,
it's happening in our lifetimes.
That's a good thing, man. I'm young.
Kevin Vaughn, thank
Okay, we're gonna touch on that real quick. I don't understand why he didn't mention like Nvidia or Intel or anything like that, but that's neither here or there. Here's my thing about AI, and I'm preaching it every video, every day. It's not going anywhere. Like it's not going anywhere. There is no AI. I don't even know why calling things like a bubble or anything like that. I don't even understand why that's a thing. Like it's nothing like okay, maybe the .com bubble, that's understandable, but even then, like having a website like that exploded, you know? Even if you weren't able to capitalize on it in 2000, and like let's be honest, like everything was slow back then. I remember back then having a DSL, it just wasn't as popular as it is now. But I would say you kind of reached the pinnacle of having websites in around 2010 or so, or even before that, right? That was the time for that. And then now you could literally just put it in an AI prompt to have a website, but that's neither here or there. But my point is that AI is not going to go anywhere. The companies that are producing these chips are going to blow up. These hyperscalers, they're like businesses like Microsoft, Google, and all of them, they're Meta, who else? Amazon, like they're not going anywhere. And if anything, I would say those are the type of because even though they're like part of some of them are part of the Mac 7 too, like those are companies that are staples in not only just American culture, but the world. Like they're not going anywhere. You get what I'm saying? And like I said, every platform that you're on or any shape, form, or fashion, any application you have on your phone, at some point, like everyone's trying to integrate AI into it. Everyone's trying to increase productivity. Everyone's trying to not only increase the productivity and make things faster, but they're also trying to keep you on their platforms as well. And with that, you need energy, and like it's not something that's gonna go away. And obviously a lot of people hate AI, like they hate things like AI slop, but you get that with anything. It's just like the internet. And the internet's one of the greatest creations of all time. But with anything in life, you're gonna have good apples and bad apples with it. AI is not going anywhere, and honestly, the valuations of these companies and the amount of money that they're gonna print and make is gonna be off the rails. Now, my thing is that this is something that's very volatile, right? So it's not something that's going to go up in a straight line, and a lot of it is going to go off of news alone. It's not going to be just earnings, but it's just going to be about what exactly they are able to accomplish in everyday living. And my point is that AI is not going to go anywhere. There's no bubble. Should you get into it? Hey, if you want my opinion, get a low cost index fund or just invest in the S&P 500. Most of it's already weighted in tech anyway, so you're going to get exposure to this. And then that's going to bring us to the next video that's on the list, is basically kind of navigating through the volatility. And then after that, we'll talk about Tom Lee's statement on Treasury buybacks. So, yeah, let's get that in actually.
We are green, but the focus is on rates as well. And we are green, as they say there, too, because yields are back up again. But really, we're turning our eyes towards next week as it plays into everything. How we just started the show. NVIDIA earnings, the Fed chair speaking, the NASDAQ 100 trying to avoid its sixth straight down day today. By the way, NVIDIA is having its best month since April. Rob, it's leading the mega caps this year now as well. It's up 16%. That is the best performance. It has woken up, as they've been saying, and now we head into a really critical week. How do you see it?
I mean, to me, NVIDIA is always important, right? And they've continued to deliver again and again and again. But the more important story, at least in the very short run, is the Fed meeting. And in my mind, they really have only a couple choices to do what they want, which is in control of the long end of the curve, neither of which I think are particularly palatable. They can obviously raise rates and, to deal with the inflation problem that we see out there. Alternatively, they can control the long end because they're limited right now in terms of borrowing short just because of the size of short-term borrowing to buy at the long end. So they can engage in QE, which would also bring that down.
But they aren't doing it. There's no Fed meeting next week.
But they can indicate, right? They can indicate, kind of tip their hand is what they're going to do. Oh, hear me out one second. The thing that would save everything is opening the strait because it relieves the inflationary.
Yeah, of course. Good luck with that. Like in the near term, though, now that you have rates backing up, does that put more pressure
100%
on what happens next week for the near-term direction of the market, maybe even more so than NVIDIA, or no?
I think in the near-term direction, yes. But listen, you need both these. This is a two-headed monster next week. I fully expect with what's going on in the AI complex, NVIDIA to deliver strong results as they always have. The question is, where do they indicate the kind of forward expectations are? And they've continued to raise that bar. So I think NVIDIA is a safe bet. I think the Fed communication is something that's uncertain thus far. We're still digesting a new communication style from our new Fed chair. But it's clear that the administration is wanting to control long-term rates.
Yeah, of course. It's as much political as anything else, I think, at this point. So what's Amy, the bigger event in your mind next week? The speech or the earnings? Because the earnings are Wednesday, the speech is Friday.
They're both big. I expect, NVIDIA will be huge if it doesn't deliver exactly, what people expect it to deliver. But I'm not in that camp. I think they're going to say great things. I think they're going to have great numbers. We'll see what the stock, actually, in some ways, I'm more interested in what the stock does rather than what the numbers are, because that will tell you what people are expecting and how optimistic people are. And that's what we really don't know. The numbers are going to be great.
Yeah, the numbers have been great, right? And the stock hasn't always been great.
Right, exactly. So that's that. So I'm actually interested in the reaction to the numbers in some ways even more than the numbers. With regard to what Kevin Warsh could do next week, he's in a hard position. He has to be hawkish. I don't think anybody's expecting him not to be hawkish. But then the question is, does he deliver? And that's what has been the question so far, is that all of his speeches have been very hawkish. And I think that's what happened at the last FOMC meeting, is everyone's like, you're so hawkish, you're saying it has to be 2%. It's not 2%. Why aren't you raising?
But he doesn't necessarily have, he sort of gets off the hook, doesn't he, by a weaker retail report, the last two jobs reports being weaker, the last two inflation reports, CPI, PPI being softer.
Right.
So that kind of takes the edge off, doesn't it? Maybe he doesn't have to be as hawkish as he otherwise would be.
But people are going to say, look, inflation is still above expectations. We still think the Fed is relatively easy. And so when are you going to do something about that? And are you going to tell me at all how you're even thinking about it? And I think that's what, but I think he is going to say, with 2% is still our North Star. We still want 2%. I don't see how he can say anything but that. And then I think that opens it up to the next meeting of like, okay, so you're saying 2% and we're still not there. And people say the 3-month, average is 1.6, and he can use those numbers, which are right, but the 2% is still far away.
So Jenny, we're at, let's just call it 7,700 on the S&P, even though we're just a little bit below that once again now. Is the determining factor between now and, let's say, the next couple months determined by, because let's also suggest that we don't think the Fed's going to do anything at the next meeting, right? We don't think they're going to hike. They're definitely not going to cut. So let's just assume that they stand pat. So then that makes next week and the speech maybe even more important. But then I got NVIDIA looming as well. So if I think that the stock market can hit, let's just say, 8,400 by the end of this year, or even stronger than that, as some forecasts are now coming to believe we can do, does next week hold the key? On both regards, earnings and Fed speak.
I don't think next week even matters, and I'll tell you why.
That is a
controversial.
bizarro.
Okay.
I'm gonna cut her off there real fast. We'll finish it, but yeah, I don't think it matters either, because regardless, it's all of it's gonna hit over 8K. The S&P 500 has historically always went up. Now there's some down years, but it's gonna go up. So I don't even think this matters. I think we really honestly, I think this is just for TV, where basically they have to have something to talk about every time they come on, because it is gonna hit there. But I think it's just a matter of how long will it take. And I think that I really do think we will probably hit it this year. I don't think it matters either. And Nvidia is going to do well. Nvidia is one of those companies. Most of these chip companies and anything like that, like we already know they're going to be making money, because like a lot of these chip companies, like some of them actually run out of product to sell to companies, and that actually kind of helps us kind of segue a little bit into the PMI a little bit, is where it was actually like services were really stronger than expected. The only reason why the CPI kind of had like maybe a little bit of a sour taste in some people's mouth, and what some people were probably missing with, is that manufacturing was down. That was kind of the only thing that was down. But as far as everything else, as far as services and goods being sold, like all these companies, they're making tons of money. So it does, like the S&P 500 is gonna go up. It's just and if you are someone that's like just getting started or going into something like this, it's really just gonna come down to a matter of how long you're staying in it, and not necessarily when you enter. The sooner the better, but it doesn't matter. Of course, Nvidia is gonna have, if Nvidia is not gonna not beat their earnings report, but even if they don't, I don't even think that matters at the end of the day either.
I'll tell you why,
Suggestion, so please explain yourself.
I think Warsh is off the hook because earnings are doing all the work, right? We've had a year where the 10-year's gone from 4.2 to 4.75,
okay,
and the market's up. If you told me at the beginning of the year the interest rates are going to be up that much, you wouldn't think stocks are up that much. Why are stocks up? Because of the spectacular earnings growth. What happens every time NVIDIA reports? Every time. They have great numbers, they're already anticipated, and the stock yawns, a little in one direction or the other direction. I don't think anything that NVIDIA says next week is going to matter to NVIDIA. We already know what they're going to say. It might matter more to CoreWeave or Microsoft or OpenAI.
But therein lies the conflict in what you said.
No. Here's the thing. All that matters between now and the next 4 months is Q3 earnings reports that we'll start to get in November. And so I think we're in a period, like I think the reason we're focusing on next week and Warsh and NVIDIA is because we have nothing else to talk about. We're just in a waiting period until earnings start to be reported. And by the way, I think earnings are going to be spectacular again. So if you want to know where I think the market ends, I think the market ends up. Might be here, might be 8,000, who knows? I think the earnings for this year and the earnings growth rates, those are predetermined. They're mathematical. They're coming. They're happening. And next week is just interesting, but I don't think it's a determinant of anything, and I don't think it's terribly insightful, because I think we already know here and now today exactly what both of them are going to tell us.
So, Josh Brown, what do you think?
Jenny, I hate to say this. I'm on the complete and total other side.
Okay.
I understand your point. I won't. The part I'm not disputing is the pattern with NVIDIA is it runs into the numbers, and then people like go to bars to watch the earnings report on TV, and it goes down 2%. And I totally agree with that part.
Thank you.
No, but you took it too far, as you always do. Jensen Huang is the AI Fed chair. You understand? He is to the earnings growth of the S&P what Kevin Warsh is to interest rates. And I happen to think that if we just focus on the stock price reaction in NVIDIA, we're missing the whole point of the exercise. We know it's going to be a spectacular report. It almost always is. We don't know about the guidance, but expected revenue of $92 billion. Just for context, this is the largest company in the world now. That would be a 97% year-over-year increase, not in earnings, in sales. It's insanity. I cannot believe this stock sells at a near market multiple. The earnings will also be up 99%, but again, everyone's going to yawn, who cares? The bigger picture, though, is that there are 200 to 300 large cap stocks where what NVIDIA has to say about 2027 and 2028 on the call next week will absolutely have an impact on. You're talking about dozens and dozens of $100 billion plus stocks, and they will trade up or down based on what the AI Fed tells us is the backlog in the environment.
And do you think he's going to say anything other than that the backlog is robust, that earnings are robust, that this is transformational? Do you think he's going to say anything negative? No. And do you think the Q3 earnings when they're reported are going to be anything but spectacular as a result? No. We already know these things. It's predetermined right now. He's not going to tell us something new.
Can I just suggest that I think we're at the stage, though, where we don't necessarily need revelatory. We just need confirmatory. We just need to hear from him, to Josh's point, of what he sees over the next few quarters.
Scott, pass the ball back.
Right, and I'll put 99% odds for confirmatory.
Take a breath, though, because confirmatory is enough. We have multiple contraction this year. We have an up stock market, but it's not as if people are extrapolating and taking multiples up for the market this year. So confirming guidance and tone is every bit as important. And I'm going to tell you right now, Dell is a $300 billion market cap. HPE is $74 billion. How did that happen? Arista Networks, you probably don't even know what it is a $235 billion market cap. Marvell, $200 billion. Broadcom, $1.7 trillion. We know Micron, we know AMD, etc. Now think about GE Vernova is a $270 billion market cap. Eaton, $165. Vertiv, $100 billion. You cannot tell me that the AI Fed and Jensen Huang as AI Fed chair, that those remarks are not going to affect vast swaths of the S&P 500. You can't convince me that it's a non-event, because I know it's not. It might be for NVDA.
I think it's going to be for everything. That's my argument.
Okay.
I think it's universally positive.
What day are you on? I'll be here.
I'll rearrange my schedule.
So
Okay, that was a good one. I'm with her on basically it not mattering. Now, well, I most of the tech that's going on, like in everything that's as far as like the S&P 500, I do think it does kind of revolve around NVIDIA a little bit, like because they're kind of the leaders of it, if that makes sense. And then you have all the other companies in the Max 7. But regardless, is that one, if you're investing in individual companies, there's a lot of other companies that are doing really good out here. I even see that in my portfolio with some of the things I pick. But my thing with that is that the S&P 500, regardless of all of this news that we're getting in the short term, it is going to go up. And I would say, if anything, is that this is just the best time to keep dollar cost averaging into it, because you already know these companies are going to have high valuations. They're going to beat their earnings reports, and everyone is essentially looking for what comes next. What comes next? And I think we're just not being as patient when it comes to it. Now, there will be some dips when it comes to that. Hence why our fear and greed index is sitting at around 53 for these equities. So because we just hit all-time highs for all of these companies. Now we're actually sitting at 55 right now. But obviously, once NVIDIA has their earnings report, honestly, I think we're just going to get a big jump in everything, and then we'll pull back a little bit. So that'll take us to our next video, where they're essentially experts are telling us to buy the dip, and then is our portfolios built for the turbulence that's going to be coming.
Declines. My next guest is bullish on the market, but says it first has to get through the end of summer lull and then September, which is historically the worst month of the year for the stock market. Let's bring in Danielle Shea. She is the Vice President of Options Trading at Simpler Trading. Danielle, good to see you. Welcome. How are you preparing your portfolio for this time of year?
So I typically get used to having some downside in the end of August and September. This is very typical seasonal action. And so what I like to do is I like to look for relative strength winners that I can buy on the dip. I'm looking for strong technical charts, especially on the weekly chart, so that I can build up positions. And one of my main areas of focus right now is absolutely the memory stocks and the semiconductors.
Why do you like memory and semis at this moment? I mean, it's been a pretty volatile trade. Granted, up tremendously since the start of the year and 1 year ago.
Yes, that's correct. So what we saw this summer was we definitely saw a pullback in the AI stocks and in this space. However, if you look at the weekly charts, particularly SMH, and then I also like DRAM, these are very strong technical patterns, and they're still holding up above the 50 simple on the weekly chart. So, earlier this week, we did start to see some breakouts in SMH, and specifically we have NVIDIA and Broadcom earnings coming up. So typically what I look for is I look for key names in the space to be positive catalysts to bring the area to the upside. I also like LRCX. I have Taiwan Semiconductor. These stocks are down today. We've seen a lot of volatility in these names, but again, this is very typical and historical for August and September, and that usually gives me a great opportunity to buy these strong relative strength names on a discount.
Okay, so buy the dip is essentially what you're saying. And it feels like every time the big popular names pull back, investors jump back in. You dropped the name NVIDIA. I was kind of trying not to do it because we still have, what, eight trading days or so, 8 days before their big earnings on Wednesday of next week. This is a bellwether for AI. This is a $5.3 trillion company. Jensen Huang is a genius. How can they disappoint us?
Well, because expectations are high. That's generally what has started to happen more recently with some of these names. The Mag 7, they were such high growth names for so long, and they're still great stocks to have as the base of your portfolio. But what has happened is the growth has substantially slowed down. And so specifically with NVIDIA, because expectations are high, it's absolutely possible for them to blow earnings out of the water and still see a slight pullback in the stock. But the thing is that the fundamentals are there and they are a leader, and we have already seen a rally going into this earnings report. So I'm continuing to hold NVIDIA, and especially Broadcom as well.
Yeah, what kind of revenue run rate are you looking at for NVIDIA? The expectation is over $90 billion in revenue in a 3-month period. I mean, can they keep growing at this rate?
No, they're not going to continue growing at this exponential rate forever, and we absolutely have seen that rate of growth slow down. But at this point, they still continue to beat earnings estimates. They still continue to rally going into earnings. And what I like about this stock on a technical basis is the fact that it continues to consolidate on that weekly time frame. And that, for me, tends to be one of my absolute best times to buy long-term stocks, because you get that consolidation and you build up that energy before it breaks out. So I still continue to like it, though admittedly, it doesn't have the same growth rate that it used to have in the past.
You sold in Home Depot and Lowe's recently. Is that because you don't see the housing market recovering? Are you not encouraged by what you heard from Home Depot this morning?
Home Depot and Lowe's, they have both been lagging for a while. And when you look at the overall picture of inflation plus the housing market, it continues to be difficult. With inflation continuing to be, high, people are just not spending the amount of money on their homes that they used to be able to spend. Just the cost of any kind of repairs or any kind of remodels just continues to be high. And so, yes, I'm continuing to look for the housing market to struggle and Home Depot and Lowe's to struggle as well. But I still like other retailers, especially discount retailers.
Which ones?
But that makes sense though. No one's able to buy houses, so of course that actually makes sense why a place like Home Depot or Lowe's wouldn't. The only people you have spending money there are going to be boomers and some Gen Xers. That's it. And then you might have like here or there some millennial and maybe some Gen Z, because Gen Z, like the oldest people in Gen Z are about 30 plus years old now, right? Those are probably might be the only people you have buying stuff at these houses. But not only that, the whole thing with the housing is that one, everything's too, all the prices are too high, so people can't even buy a house, or at least they don't feel like they're getting a good deal. The interest rates are high as well too. That's why things like the 10-year Treasury plus Treasury yield matter as well. So you also have the interest rates high as well. So if they do buy a house, they're probably going to be paying about 6 or 7+% interest. Then on top of that, you have to pay the tax for actually having your house every year, right? So and if you don't pay the tax, regardless if you're paying the mortgage, people are still gonna take your home away. So do you even own the house? And then on top of that, right? If you have a house, you're responsible for everything that gets fixed there. And then on top of that, you may or may not have homeowners insurance. So there's a lot that's going on. And then to top it all off, even though we make as much money as we ever have in history, everything else is so high as well as far as inflation. So you have all you like for a lot of people, it's kind of sad, but it actually doesn't make sense, and you're probably not going to be able to get a house. But if you don't own a home, let's keep it a buck. Then there's really no reason to be shopping at Home Depot or Lowe's. The only people that would shop there at the most might be people that are working in blue collar jobs, and then usually those are just kind of one off purchases. People will have tools for about a couple years, and so it makes sense why a place like it makes sense why those places aren't doing too hot now. Honestly, I don't think those places will go out of business because people are still gonna there's still gonna be handyman out there. There's still gonna be people that like working with tools, like working on cars, stuff like that. So it's never gonna go away. But it makes sense why there's a drop because a place like this it makes sense why it would be affected by housing. But the whole housing situation is it's a whole nother beast within itself. not only does it cost so much to own a home, because it's not even just buying the home, it's the upkeep to keep the home running. Like that's what some people actually don't look at when it comes to buying a house. Yes, you can get a house somewhere cheap for like 50K. I mean, not 50, but like 100 or 200K. But it's everything that you have to put in to keep it up, and then because you have to take care of the home, because maybe you want to leave the house too, so you can't just let it go to crap, right? You got to take care of it. So it makes sense why these places aren't necessarily doing too hot, at least especially their prices. But that's a whole nother beast within itself, because you have a bunch of homes that people want to sell, that the market doesn't believe it's even worth that much. On top of that, you have people that can't buy homes, and then you have places like BlackRock or Blackstone or whatever buying up all these properties, and no one's even living in the homes too. So that's just a whole another can of worms. But it makes sense why those prices aren't doing too hot in these stocks.
So specifically Ross, I also like Walmart. Walmart did pull back pretty substantially after its last earnings report, but I continue to hold Walmart shares, and I like the stock. I like the way that it's consolidating on the weekly time frame as well. So I like Ross. I like TJ Maxx. Definitely Costco. Costco had a phenomenal run up, and again, this stock has been pulling back and it's been consolidating for quite some time. But Costco remains one of my favorite holdings in this space.
Yeah, Danielle, they're reportedly offering Medicare Advantage plans in some states soon. So that would be your all-in-one shop for value on, the hot dogs and all the big bulk things you buy, your contact lenses, your glasses, and, well, your insurance, health insurance as well. Let's talk about Estera Labs and Seagate Technology. Why specifically do you like those two names?
So, I'm a momentum trader as well. I have my long-term investments, but I also love trading momentum. And what we've seen with these stocks is that they're very strong relative strength names. They're leaders in the AI space. And specifically what I like about them is the way that they have recovered over the course of July, and the way that they're beginning to break out up above the 50 simple on the daily chart. This tends to be one of my...
Danielle, I'm looking at the Philly Semiconductor Index today. All 30 stocks in it are down, and not just by a little bit. Some of these names are down double digits. So it is quite an ugly day today. So this is an opportunity then to buy the names that you like?
That's correct. So what I'm seeing with the SMH specifically and the semiconductor index is that it attempted to break out up above the 50 simple specifically yesterday and the day before, trading day before. And so what we're looking at here is we're looking at a key technical rejection of that level. However, that doesn't mean that that's the high. It doesn't mean that we're never going to breach that level again. What it means is that we're seeing rejection at that price point, and we're likely to consolidate August and September below those zones that will just give us buying opportunities at a discount. So yes, it's down. Yes, it's been volatile, but the semiconductor space is absolutely the leader in the overall market. And if and when that strength picks up to the upside, I expect that to be the space to rally first.
All right, make it.
No, that makes sense. I own DRAM in my portfolio. I'm building that up. I also own QQQM, so obviously I already get exposure to that. And then I have the S&P 500 Duke PO. So I honestly, when they mention some of these names, I don't care. But the thing is that we built our portfolio up from $1 to $5 a day. So we like when they start mentioning some of those names, it's like, oh, okay. But I'm not really too like phased about that. What I care about the most is how us, the everyday people, are going to navigate through this. And they mentioned Costco, Ross, and all these places, and these are places that you probably shop, right? Target, Walmart, right? These are places you probably shop. So we're gonna bring this back, and then we're going to see how it affects you, that's known as retail and just the common person. Now, let's see what they say. They're going to say consumers will open up their wallets. And I saw a comment where someone said people will open it, but that doesn't mean anything is there. Let's
Well,
get
keeping
into
the
it.
conversation going on the consumer, my next guest notes a resilient one, but also a highly selective one. Joining me now is the LSEG Head of Consumer Research, Sharon Martis. Sharon, I'm thinking inflation has finally hit the Walmart shopper, but I think you think it's deflation that has hit Walmart.
Correct. The market is punishing Walmart today because of the comps not meeting expectations. Expectations matter. However, if you exclude the deflation of the prices that we saw in pharmacy, that comp number goes from 2.6 above the 3% healthy mark, telling us that Walmart actually did have a robust quarter. On top of that, traffic was very strong. Transactional numbers were up. So this is telling us that the consumer is going into the store. On top of that, Walmart is still gaining market share from all the income levels, and it simply has something that traditional retailers don't have, which is its high margin businesses. Today we saw advertising up 38%, membership is up double digits. So this is making it more difficult for the competitors, traditional retailers, to even compete with Walmart. And on top of that, it's throwing back the trade refunds back into everyday low prices. So overall, it was a very healthy quarter for Walmart.
So it's cheap and convenient, and the consumer likes that. So this near 10% decline, you say, is an overreaction?
It is an overreaction.
So you buy at this level?
I can't make no recommendations, but it looks attractive.
How's the overall consumer doing? We're still in the back-to-school shopping season, and if you go shopping, you realize that they're shoving Christmas and Hanukkah down our throats
and
already.
Halloween.
How's the consumer?
The consumer is actually healthy. They're still spending, but they're being very selective and value conscious. And convenience is very, very important to them. This week, we saw double-digit e-commerce growth at Home Depot, Lowe's, Walmart today, and Target even saw a 25% spike in same-day delivery. So consumers will open up their wallets if they find that they can get the convenience of shopping. They are all about instant gratification. You can order something on Home Depot and have it delivered to your house in 3 hours. So we're seeing that the strength, the double-digit growth is happening at the retailers that are investing in technology to make everything go faster.
Meet the consumer where they're at, or in my case, where their kids are at. I mean, my kids ask for something and expect it there in the next hour. And then when I say, no, we got to go to the store, we can't do that now. Well, Mom, just go to DoorDash or just get it same-day delivery.
Or order it online and then pick it up on your way home from work.
Goodness. What patterns are you noticing in the spate of retail earnings that we've got? And of course, Ross is after the bell today. Ross Stores, which is off-price.
So the off-price retailers, consumers love the treasure hunt experience. They love to shop for a value. Value has no longer become a promotional tool. It's actually become a competitive advantage. So what we're seeing is that if a retailer wants to attract shoppers into the store, they must have the value proposition. In a collaboration with Centric Market Intelligence, Altcoins discovered that the amount of merchandise on sale has spiked up to a 6-year high. So retailers are offering more items, more merchandise on sale to attract the shopper. Now, what hasn't changed is the percentage offered on those discounted items. So they're giving the illusion that that you're getting a big promotion, more merchandise is on sale, but they're being very strategic with the discount, with the percentage offered, so that they can protect their gross margins.
And now there's this whole idea of personalized pricing, where we could be shopping for the same thing, but they know your search history and consumer behavior, and they know mine, so you get a better price than me, or vice versa?
I think that's especially very popular among traveling, and that's why it's important to clear up the cachet on your laptop.
Good advice. Five Below, I swear I live at this store because they have squishies and Neatos.
And everything else for the house too.
It's pretty good.
Yes, so they've become very popular for the back-to-school season, and according to our StarMine data, they're very likely to beat earnings estimates this earnings season and post a positive surprise. Additionally, we have Ross reporting after the market today. Ross, their Smart Holdings is telling us that the buy side and investors are finding the stock very attractive. It has positive price momentum to its favor, and earnings are coming from sustainable sources. So it's well positioned, especially in this environment, because consumers still want designer, but for less.
But then there's Williams-Sonoma. You like it. They're the home of like a $25 spatula.
Right, but the high-end consumer is still firing at all cylinders, and they're still shopping. And what Williams-Sonoma does very well is that promotional activity that we just talked about. They still have promotional discounts and events that consumers actually open up their wallets. They're just being more strategic how they protect their margins.
Sharon, thank you very much. Nice
Thank you so much for having me.
All right, that was nice. So, long story short, all these businesses are going to do well, probably until the end of the year. And not because, like she said, we have back to school, right? They got not Hanukkah, Halloween. Then we're going to have Thanksgiving next. So, if a business does sell food product, they're going to be doing well. And then you have Christmas. So, all these like everything's honestly, a lot of people are going to be making money because advertisers and these businesses are going to want people opening up their wallets. Now, my thing with this is that I under the impression too that a lot more people have more money than they say they do. But I think the key thing is that people now is that, and I got this term from someone else, but basically no one has walking around money anymore. Basically, you walk outside, you walk down the street. You don't even have to go to a mall. You could just be walking. You can be passing mom and pop shops or going past like sweatshops. What's it called? No, swap meets. Yeah. Basically, you're just walking. You're just living your life, but you're not necessarily going out to buy something. But if you did want to buy something, you wouldn't feel like, man, like maybe I'm cutting it close or anything like that. Whereas if you see something that was like 10, 15, $20, or even like $40, you wouldn't care because you got your walking around money. Like it's not necessarily dipping into your budget or anything like that. It's just your fun money. A couple dollars you got in your pocket. If you want to buy something, you can. And that's my thing. But when you go to these businesses, whether it's like a Ross or a Walmart or anything like that, these places are stomped. Go to Walmart at 5 p.m. Stomped. People everywhere. Carts filled up to the brim. They have to open like maybe 15, 20 checkout aisles. The people are going to be spending their money at these places, but at the end of the day, a lot of people aren't necessarily, even though they're spending today, a lot of people aren't optimistic about the future. And I think that's what it comes down to. And then that kind of lets us tie it all back in to these treasuries where basically everything's kind of spiking. And then on top of that, they're basically doing treasury buybacks as well too, because if this thing keeps shooting up, the everything around you is going to be going up. And then not to mention you have the freaking US and Iran war still going on as well too. So you're not only going to have to be opening up your wallet into these discount stores or even just a regular store like Walmart or something like that, or Target or Costco or anything like that, you're also going to have to open up your wallet and spend almost $60 to $100 at the pump, depending on what car you have. And then on top of that, you like inflation's just eating you alive. It's crazy.
Fundstrat's Tom Lee is here today, and so is Requisite Capital's Bryn Talkington. And we're happy to say both are CNBC contributors. Bryn, welcome. Tom, it's good to have you here on set. What do you make of what the professor has to say here?
I mean, I think Jeremy's pointing out some important things, but to me, I actually think the Treasury buyback was a wise thing to do. I don't think it's any different than a company saying, hey, look, there's some things that are getting investors nervous about my stock, but it's things that are not related to my company. And I think that's what the Treasury signal was. And so I don't think it's manipulation. It's really an indication of value, and I think just trying to put some signal out from the noise.
What if it doesn't work?
Well, if it doesn't work, they have more dollars to put to work. So I do think, the Treasury Department does have a lot of resources available. So I assume it's going to work.
So you assume that yields are going to start going lower again?
I think that we need to just have some ballast until we get some clearance or signal from what oil is going to do and the direction of CPI and things that are giving the market a little hesitation. And of course, Jackson Hole is this coming week, and I think that could provide some clarity, and all that could quell whatever risk premium is being built into yields.
Bryn, how do you see it?
Well, I think a lot of the narrative this week has been, well, Kevin Warsh is in a little bit of a pickle because he's been saying, well, let the bond market tell us what's happening. And then at the same time, as a juxtaposition, Secretary Bessent is buying treasuries. But when you actually peel that back, the 30-year, first of all, the 20 and 30-year are very illiquid. It's about a $6 trillion total market if you look at long-duration bonds. No one signals off the 20 and 30-year. It's really the 10-year, the 5-year, the 2-year, and they're not buying that. So I do think Fed Chairman Warsh actually has the ability to thread the needle to say, first of all, these purchases by the Treasury are tiny relative to the aggregate amount, and it's more of a signal that the Treasury says we'll come in and buy these longer duration yields, because the reality is the 10-year and that shorter duration is really what everything is set off of. And so I think that the market, though, the stock market will be range bound this week because, as both the professor and Tom said, the meeting at Jackson Hole, which he speaks on Friday, I think that's really going to be the seminal moment where we understand what is he actually thinking, or what's he going to tell us about what he's thinking, since he already says he's going to be a man of few words as Fed chairman.
Tom, do we think that next week is the most consequential for the direction of stocks in the next few months? You're not going to hear from NVIDIA again for a while after next Wednesday. And then I don't think people really think that anything from the Fed's going to happen in September or even October until you get to the midterms. That feels to me like it makes next week even more consequential for stocks.
I'd agree. I think it's what I'd consider a clearing event, because let's take the AI story. There's been concerns about data centers and political opposition, and it's caused the trade to stall. I think Jensen Huang's going to re-inject a lot of confidence that, look, there's still this relentless demand story, and it's going to be taking place regardless. And similarly on the Fed, I do think the uncertainty builds between Warsh's appearances, and so I think this is another chance to course calibrate.
You raise an interesting point. So you think what certainly appears to be growing opposition to data centers is having an impact on that trade in the stock market?
It is, because if data centers can't be built, then the entire bottleneck trade doesn't look as durable. So I think that what we saw in Ohio and in Florida and Texas and Pennsylvania, which is now governors putting potential moratoriums, or even voters saying it's a political issue, is causing investors to pause.
What if that doesn't change? I mean, I'm literally looking at one of the most recent polls right in front of me that I happened to see earlier today, and the support is decreasing across all political parties.
Yeah. I think it tells us that the AI industry, especially the labs, have to start messaging that it's not doomsday. I think it's something that this political issue could become a problem. But that's also why the downstream AI stocks are starting to work. The software this week did well. Even the biotechs and then the cryptos, because they're all downstream stocks to the AI story.
How about
All right. That was great, my boy Tom Lee. And speaking of Tom Lee, if you are invested in Ethereum or even his company BNB NR, you're probably sitting pretty healthy and hot right now. Now we got all that out the way. Now we're gonna tie it back into what I'm doing now. Check this out. So the portfolio, we are closing in on 6K, and more than likely we're gonna hit it. Honestly, we're probably gonna hit it this week as we close off the month because of the capital I'm gonna allocate into it. Now, my plan. So like I said, I'm not a heavy investor. I'm not some $1 million business. We built this portfolio from scratch, brick by brick, with $1 to $5 a day this year, right? I'm gonna keep investing in the S&P 500. Now, as far as tech or anything like that, I am gonna pull back a little bit from that, because my main thing is that I already know that things are gonna be volatile. We have hit all-time highs, but the main thing is that I want to keep my base. Also, after this month, I'm gonna start buying my Bitcoin again, because honestly, anything under 80K is pretty good. Now, I'm not gonna be doing like an hour of my wages like I've been doing, which honestly I probably wish I kind of held off on my plan for how to accumulate Bitcoin this month, at least before we shot up past 70K. But it's okay, it's neither here or there. But the thing is that those are the main things I'm gonna be doing as we kind of close off this year is keep building my base. If Ethereum can go back below 2K, which I think it will, and I hope it does, we're probably going to try and close in to try and get about maybe one coin or at least up to about 75% of a coin. Because I really do think that tokenization is going to be. Here's my thing: when it comes to crypto, that's the only thing that matters, right? It's the only thing that matters is Bitcoin, maybe some Ethereum. Now, Ethereum is not going to be the biggest thing in my portfolio, but it honestly might rise and it might outweigh my stock position in my portfolio because of how much the price with something like that can run up. We're far away from all-time highs of 4,900 or wherever it was back in October. And then with Bitcoin too, I personally think anything below my average cost is good when it comes to it. Obviously, we're not there right now, but I think I think I'm gonna just stay the course. Like, but I'm not gonna be looking so much as far as building up these other individual positions because the thing is that a lot of them have ran so much. I feel like I probably missed out a little bit, but I know at the same time where most of these positions that I do have, I already get exposure to it from the S&P 500, and so I want to close in on my one share. We're about $60 away from getting to that one share of VOO, and then I'm also going to start allocating more into gold. Now I've been doing little like roundups here and there into it, but I'm just going to be doing that a little bit more, not only for the hedge, but it's an asset that you can't go wrong with buying. And that's the main thing that I want to have my portfolio built around is I want at least two foundational pieces of scarcity, something that just can't be duplicated, can't constantly be printed. Because the thing is what a lot of Bitcoin maxis is that they also believe that the S&P 500 is going to keep going up, but it's going to get to a point where not only is it going up, but the value of the dollar is constantly shrinking. So even though you might see like a 1,000 or $1,500 VOO, the price of that dollar is going to be cut. It's already dropped like 99%, but it's going to drop maybe another 0.0009999% as well too. So I want some diversity. I don't want to be all in on Bitcoin. And obviously, I think we still are in a world where we need fiat currency. So it's not something that I'm just gonna like just disregard. Like I want some equity. And I hit a good milestone when it does come to the equity side. So I think the last time I did like a portfolio overview, the stock side was sitting at about $900. So we've actually been doing pretty well with that, and I have some good positions here. But the main thing is that I'm going to be focusing on is honestly just building up a base, and then everything else it will essentially just be satellites. So VOO obviously will be the heavy lifting. We'll have QQQM. We'll introduce that a little bit more because I think we're still going through a little bit of a correction. Honestly, I might put a buy in today. Or at least Monday, because Nvidia, my theory is that it will shoot the market up for a bit, but then we're going to retrace a little bit. I think there's going to be a lot of volatility, and with not only the the Treasury news, the Iran conflict with the US and all of that going on, that's also what's going to help Bitcoin rise again. So I'm not going to put a dot like I'm not going to like I said I'm not going to be putting an hour of my wages into it again because we're in that greed territory and we are still far away from October, which a lot of notable people in this space do believe we're the true bottom of Bitcoin. But the point is that if you do look at charts or anything like that, typically around this time is when you do buy during the second half of the midterm year, you usually do make good returns. And when it comes to the stock market in general, typically that's something you kind of set and forget. Especially if you're retail. You just allocate a little bit here and there every day, and then you just kind of turn the app off. I wish I could do that, but I make content about it, so I kind of have to look at it all the time too. But if you are just getting started and you haven't even picked like a platform that you want to invest in, I strongly will recommend Robinhood. Now, and I probably I should be sponsored by them at least after this year because I'm gonna keep giving them praise. This is a great business, not just to invest in, but it's just the fact of what it can do. You can, and I know a lot of other places do this, but you can get started for just fractional shares. You can buy just $1 into the S&P 500. You can create a Roth IRA that gives you up to 3% contribution matches on everything you put in. Like I'm just saying, so if you don't have a retirement account, like the sooner you even start that, the better. Then they also have the best. credit card on the market, you get 3% cash back on everything that you buy with it. I'm just saying. And this is something that's going to be the future. Because as we as a generation and as a world, a lot of people are going to be moving away from TradFi, things like Chase, Bank of America, like all these places. People are going to want something where they can kind of have that all-in-one app where not only they can bank, which you can do that with Robinhood too. They give you 3.5% APY not only on your checking, but on your savings too. So it's essentially a high yield savings account. Right, you not only are going to get that, and it'll give you access to other things like a Bitcoin. Now, I personally, I buy all my Bitcoin on Coinbase. I don't really care about the self custody thing. Like at least as right now, I don't, because I don't know. Like I can move anytime, anywhere, and the last thing I want is my Bitcoin getting hacked or something, or losing it. It could still get hacked, or I could lose it with it having being on Coinbase or something like that too. But I'm just saying. Like, if you are looking into anything like Bitcoin or Ethereum, go with Coinbase. You can even stake it on there. I think you can stake on Robinhood too. That's another thing I'm mad about because of the state I'm in. In California, we're not able to stake. So I'm really disappointed that I can't be earning a yield on my Ethereum. But that's okay. That's neither here or there. But if you want a link to either of these, they'll be in the link in the description below. If you sign up through Robinhood, you can get a free stock that ranges from $5 to $200. That's free. And if you do want to get some Bitcoin, my personal opinion, or at least how I would do it, is not advice. I'm just saying what I would do is that get access so that way you can get the debit card. This is a free debit card. You can put the cash that's sitting in your bank account here, you could just put it here. And then not only that, you can earn a yield on it. And they also give you 0.5% back in Bitcoin. Now, there's other places that give you more. Yeah, I know. But just the fact of seeing your money, or at least your Bitcoin stack, if you will, just to kind of see it rise, that way it could probably make you a believer of this, because I'm up about $800 this week, but I went through that volatility when we were going down from 90, 80, 70, and 60, and even 58K. But even right here, right? So I've also I'm doing something else with my USDC on Coinbase. I'm earning a yield right now. I'm getting about 7.08 APY on it, and then I'm also having that be converted into Bitcoin as well too. So that's kind of been my plan so far this month with Bitcoin. I haven't really been allocating any new capital into it, but the thing is that your money is losing purchasing power every day, right? At least here with something like Coinbase, you can at least off. You're kind of breaking even a little bit, but you're not beating inflation. But it's better than just having it sitting in your bank account. I'm not saying don't have a bank account, but there's just other alternatives out there, and we're moving to a new future. Why the people that are going to be doing well are the people that learn how to use the tools like AI. So that's why I'm saying like there's no bubble. Like the thing get like the more you use it and the more you learn how to not only help other people's lives with it or even just help yourself, you're going to be the one that's winning down the line. And then the people that own assets, they're going to be the people that are winning. But to cap it all off, that's what I'm doing. Bitcoin, some Ethereum, if it does pull back, gold, and the S&P 500. That's really what I'm focusing on, and then I'll keep buying SEHD too because that's just a beautiful dividend stock. It's been hitting all-time highs, even though people aren't talking. I mean, because there's a lot of other high yield options out there. It only gives you like a 3.1, but the thing is, it's kind of acting like a growth stock right now. At the same time too, because when everything does do bad in the market, that's when SEHD kind of has its time to shine. But that's it. That's all I got. Like the video. If you made it here, you're a champion. You got to give me a like if you made it to the end of the video. You have to. You have to. Like, there's no second guess. Like no ifs ands or buts. I deserve a like if you stayed around 53 minutes because this is a long video. Subscribe if you're new, especially if you want to see the journey or if you feel like I even taught you something new. Because the whole point is that I don't want to. When I get obsessed about something, I don't stop doing it. That's how I know I'm always going to keep investing. So I rather show the journey now then hop on here when I do have a 10K or even a 100K portfolio. That way I can kind of show you because I don't think I'm special. If I can do it, you can do it too. Like I said, I started this with $1 to $5 a day, and I just stayed consistent. I just stay consistent, and then obviously as I learn and grow doing all this, hopefully I can share some of that knowledge with those that watch along the way too. So like the video if you did, subscribe if you're new, and I will catch you on the next video. Hope you have a good day.